I'd like to welcome you because we are live and welcome to Behind the Markets, the Wealth Wednesday edition. Thank you very much and a good morning to you, Stephanie. And how are you doing?
Good morning to you, Munyumba. How have you been?
I'm fine, thank you. And for the purpose of it all, let's get into it. Welcome to everybody. To everybody who's joining us wherever you are from the country, give us a shout. What's your name and where are you joining us from? Today, we are going to start with a thought, Stephanie, because it is Wealth Wednesday. I wanted to get into some wealth thinking. And here is the thought I want to leave you with, or well, not leave you with, but I want to kick off the day with. The poor pick sides, the rich have interests. It's just something I wanted everyone to understand because today I'm going to be talking about a story about a transaction, and I know it's going to spur off a little bit of conversation and the usual yada 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 that people get. What I always want people to understand is that wealthy people do not pick sides. They always maintain their independence to maintain their power. What they have are interests that they pursue, and whichever side speaks to their interests, they don't care. Okay, it's actually one of the greatest lessons you'll find is that, and it's actually an American lesson. In America, you found that in the 1990s and the 2000s, the wealthy Wall Street bankers were Republicans because they needed deregulation to grow really fast. But now that they've become big and they'd like to consolidate their positions and they want regulations to protect their strength, now they've become Democrats because they want that regulation to protect their market position. So they are pursuing the interest of consolidating their wealth. So that's why I said before, the rich have got the poor, yes, the poverty-minded person pursues the world according to what side they are on, while the wealth-minded person pursues a strategic set of interests, and they only answer to those interests. I'm going to show you a clip, Stephanie, from a movie I watched a while back. It's actually a bit old. It's an old Mark Wahlberg movie, and it's called Shooter. It's a movie about Mark Wahlberg, who's a sniper who's been set up by a group of senators and a group of people, and he's actually trying to clear his name. But as a result, he actually meets now the guys who have actually set him up, and he goes on to actually have this conversation where the senator, who's the bad guy you're going to hear, is going to give one of the best movie speeches ever. It's only about 20 seconds, but I want you to hear his words specifically, and just give me a clue, Stephanie, if you all can hear this.
Job. Work for you.
Yes, we
As
can.
bad as it seems, it's all going to be done in any case. You might as well be on the side that gets you well paid for your efforts.
And what side are you on?
There are no sides. There's no Sunnis and Shiites. There's no Democrats and Republicans. There's only haves and have-nots. What is that?
So you heard that speech very carefully, and I think that was very well crafted. I loved it. It was actually one of the best speeches I've heard in a movie. And it was such an honest portrayal of what the world actually can be like. In fact, it actually is like. He says, look, there are no Sunnis and Shiites, there are no Democrats and Republicans, and I'll even venture to say it here in Zambia. There is no UPND and PF. They are the haves and the have-nots. And that's all. There's no such thing as sides. So I always hear Zambians having these conversations. Oh, the 2.8, the 1.8, yeah, lobbing comments at each other. The leaders of the 2.8 and the leaders of the 1.8 drink in the same parliamentary bar at the end of every day. They're friends, people. And only you are the ones who are willing to go and beat each other up on the streets, thinking that you're doing any favors for them. That's why that's why you never see the actual politicians engaging in cadreism. They're too rich for that. They leave that for the poor cadres who go and get themselves hammered and beaten to a pulp for things that they'll never benefit from. So if you want to start engaging in a lot more wealth conversations and actually doing a lot more things that rich people do. Remember, I've been saying for a while, if you do poor people things, you will be poor. If you do rich people things, you will eventually be rich people. And the reality is, picking sides is a poor people thing. Pursuing interests is a rich people thing. Rich people have no sides. They will back both parties. They will fund both political parties. Okay, they will work with whichever government is in power. They don't care. They have an interest in running their businesses and building their wealth, and they are not aligned to any specific sides. I hope does that make sense, Stephanie?
It does. It does. And now I'm actually thinking about the fact that there's no need to actually get a side, especially, as you say, the poor are mostly the people making sides. Now, I'm forced to think about what kind of mentality, gets somebody to begin to choose sides. And maybe talking about sides, then how then do you also make sure that now that we've known that it's actually the poor picking sides, how do you overcome the picking side syndrome?
Well, you overcome it by actually having an agenda of your own. You actually need to have a set of principles, a vision. Once you've got a set of goals and a set of visions, you will collaborate and work with whoever aligns with that vision, regardless of whichever side or whichever color, whichever creed or whichever gender or race they are. Once you have a specific goal you are looking to reach, then you can actually start to pursue an interest. And that's the difference you can find between the rich and the poor, is that while a lot of poverty thinking is aligned to belonging. People want to belong to a clique, a group, a class. Everything they do is about belonging. It's an insecurity and a desire to belong at any means necessary. While you often find that those who have got a specific point, they have got a goal. They've got something that they are pursuing that is more of a goal. It's a principle, it's a vision. That's the difference. So if you do not have a goal and a vision for your life, a long-sighted one, what ends up happening is you get pulled into whatever side will accept you, and you will do whatever it takes to just keep being accepted by a side. Most people, Stephanie, are very intelligent, very deep, and they have a lot of potential when they're on their own. It's when they form groups with other people where they have a tendency to lose their brain cells. That is what happens to a lot of people. It's when we start to come together, our thinking capacity starts to come down, and we are driven by our insecurity to stay accepted by a group. That's where the problem starts to lie. So you'll see that very wealthy people, that's why I'm saying the people who are rich in this country have been rich since the MMD, still were rich through the PF, and are still going to be rich through the UPND. Why? Because they don't care about sides. They care very little about sides. They care more about interests that support their wealth building or their business or their agenda. That's what they care about. And that's what you'll notice. They've got something guiding their vision. I don't know if that finally makes sense now.
Yeah, in short, you're saying it's basically by minding your own business, right? That you
By
actually
having
get
your own business to mind, actually having
exactly.
your own.
Let's see what people think on the other side on 077 And we are saying that obviously, if you're not going to mind your own business, you definitely are not going to make it in terms of those that really have true wealth. That's if you've actually experienced what true wealth is. I could boldly say that. In this country, not we've got a few numbers of people that have actually experienced what true wealth really means. So get to the conversation on 077 Give us your comment and your thought on what we are saying today. Over to you again, Munyumba.
So I've left it also as the question for everybody who's here in the comment section. The poor pick sides and the rich pursue interests. And the question is, do you agree? I'm gonna leave it out there. Do you agree? I'll leave it to you whether it's something you believe in, whether you agree or not. That is the thought. That is the pulse question for today. The poor pick sides, the rich pursue interests. Do you agree? Sorry, I left that out. The poor pick sides, the rich pursue interests. Do you agree? And that's a thought that I want as many to try and dance around onto. Now, getting on to today's conversation, Stephanie, let's get into Wealth Wednesday, which is wealth building activity. We're going to be talking about a lot of what's happening on the market, but let's start with the market roundup. Yesterday, we did see the Kwacha jump yesterday all the way. We did see the Kwacha jump all the way up from, raise in strength by about 1.27%. We have seen it still against the dollar. It's wiped out the weak gains against the dollar. So it wiped out all the gains against the dollar for the week. And you can see year to date, the dollar is still strong. While we're also seeing that the Lusaka All-Share Index yesterday went up a little bit because there was a bounce back in Zanaco shares. We did see that the bond index was up by 0.7%, while the USD bond index was up by 1.14%. Now, in dollars, we did see that the dollar was up. The dollar did come down yesterday by 1.37%, and that was the raise in the kwacha. That was the first day where we saw the kwacha actually pick up after a long.
We do have a call. Could we pick this call?
Yes, please.
Hello. Hello. Hello, good morning. Hello. Okay. Hello, good morning. Okay, there seems to be some noise. Hello, good morning. We're not able to get you. Hello. Okay, so if you are going to make it a call, then just make sure that you're in a less noisy place. And of course, if you're making it a call, then you gotta call on 077-1616-290. Is it true that the poor are picking sides?
And the rich pursue interests. Right. So let's get back into the market breakdown for yesterday. As we saw that the Rand was also up about 0.03%, stayed very flat. So that has stayed exactly where it is, while the dollar was the only piece of the news where we saw anything change. Now, we did see the GRZ bond index is up 15.09%. Year to date, up 0.07%, while in dollars, the bond index is up 1.14%, while year to date, it's up 8.4%. But interest rates did slide down by 0.01%, down to up 49, 0.49%, but down 0.02% on the week. Now, we did also see that commodities yesterday, copper was up 1.76% as we await Fed data, and we're looking for any signs of Chinese stimulus, 8,674, up 3.61% year to date and up 1.76% yesterday, while oil was up 0.37%, though it did start to edge a bit lower towards the end of the day on the basis that there is an awaiting for, we did see crude inventory stocks rise, while we also are awaiting the Federal Reserve to raise rates and looking for their outlook. Gold was up 0.19% as everyone is looking at potential recession outlooks coming in the future. Bitcoin is down 1.4% in dollars yesterday, mainly because of the strengthening of the kwacha. In kwacha yesterday, mainly because of the strengthening of the kwacha, and a slight tick down in Bitcoin. Same thing we saw in Ethereum, down 1.4% as well, while gold is also down 1.18%, mainly due to the strengthening of the kwacha and its slight pickup as well. So cryptocurrency is on the wait, as we're also awaiting Fed data to see what the outlook is going to be specifically for interest rate hikes. So on the broad spectrum, by yesterday, we did see that we are seeing that bonds are up 15.1%, stocks up 12.1%, USD up 6.3%, and gold is up 14.4%. And remember, the red bar represents real rates. We're waiting for inflation data to also adjust those as well. Bitcoin is up up 86.1%, but remember that is mainly due to quarter one's performance of 90% up year to date. It is still down since the end of quarter one, and Ethereum is also up 63.3%, also mainly due to quarter one's performance. So since quarter one, these two things are down. Remember that Bitcoin, gold, USD, Ethereum, these are highly volatile things. So you have to remember that they should not be your mainstream portfolio. They should be a hedging instrument that you use for broad market downturn to diversify in out of the norm economic situations. Now, in terms of our four horsemen indicators for yesterday, we did see that the BOJ core interest rates, core inflation has started to come down in terms of Japan, from 3.1% to 3%. So that's showing tailwinds of inflation coming down. API crude data showed that crude reserves or crude inventories were up 1.3 million barrels, pushing the price of oil in the downward spectrum. Leading indicators of South Africa are showing slowdown activities. German current assessments and Red Book data are all starting to slow down or go into the negative, while we're having US consumer confidence and Korean consumer confidence also starting to pick up. So that's a bit of a tailwind that's also helping propel potential economic growth. Now, in terms of interest rates, British treasuries, 15-year treasuries, auctioned a little bit lower. That's a bit of a tailwind, at least seeing it flatten out. But unfortunately, US treasury notes for 5 years were up from 4.02% to 4.17%, while Nigeria raised its interest rates by 25 basis points as it's trying to fight its inflation battle. And in industrial data, we're seeing German business expectations coming down. CBI trends did pick up, did come down, but just a bit less. Manufacturing sales data in Canada came down. Housing prices in the US slowed down, while manufacturing in America is still deeper in the negative. So we are seeing industrial weakness, interest rates still elevated, inflation coming down, and mixed reads in economic growth. So in other words, slow expected economic growth. That is very strong sign of what we're seeing, especially expecting for the next couple of years. The world economy is not expected to start speeding up anytime soon in that regard. Now, why did I start with that story about poor picking sides and the rich pursuing interests? Because here is the main story for today. The big story for today is, sorry, I don't know, Stephanie, if you had something to say?
No.
Okay, so the big story today actually is on real estate investment Zambia. If you're a stock picker today, you may want to pick in on this one. It's actually a very big story. So an announcement was made yesterday on the Sens about a potential acquisition that is set to be done by Real Estate Investment Zambia. And I'm going to read part of it. This is an asset acquisition announcement that came out yesterday, just to refer to it. And what it does read is that further to the cautionary notice that was issued on the 22nd of May 2023, the Board of Directors of Real Estate Investment Zambia PLC wishes to inform the shareholders that at the market that the company intends to acquire income-generating real estate assets, which are properties, to add to their portfolio, which is the proposed transaction. These three properties are Acacia Park, owned by LMC Properties, Jacaranda Mall, owned by Akona Properties Limited, and Liwanika Mall, owned by Flory Limited. Okay, so this is a transaction that is set to occur. Now, let's talk about what this transaction could mean. Now, I know, like I said, here's where it can get a bit dicey, but this is just an asset acquisition announcement of what they are working towards. Will they be able to successfully do it? That's a different story, but this is what they're putting up right now. So the acquisition of the properties is expected to broaden real estate investments portfolio, mitigate their risks, and position them for long-term stability. One of the biggest problems that real estate investment has been battling with has been Arcades as an asset. Now, Arcades has been improving, but the problem with Arcades Mall is that it makes up about 50% of their revenue and their space, their leasable space. So because of that 50% revenue, that 50% of their portfolio of assets, Arcades has actually been an unfortunate situation, especially when it was vacant for a long period of time. I think at the end of 2022, its occupancy rate went up to 76%. That's the good part. But it had a vacancy rate of close to about 66. It had a vacancy rate, about 60%. Now it's 70%. So therefore, we're seeing about 76% now of real estate investments portfolio of assets which are now occupied in terms of that. Remember, real estate investments is a property company that owns a lot of commercial property, whether it's malls or so forth, and Arcades being their biggest one. Now they're currently considering a cash. They're considering this for this to be a transaction based on cash or equity. The properties will be highly situated.
We have another call. Should we pick it?
Give it a shot.
Hello.
Yeah, good morning.
Good morning.
Yeah, I do agree with what Mr. Munyumba said, that the poor do pick sides. Even in Christianity, the Christians, they do feel good if they belong to that prophet or to that congregation, even if it means the one is staying poor for 30 or 20 years. As long as you belong to a certain congregation, it's okay. Thank you.
Thank you. You should have told us your name, though.
Oh, this is Mr. Peter from Gendere.
Good looking out to you, Mr. Peter.
Thank you.
And there you go. It does even work. Your pastor is rich, but you're picking sides. So let's get back to even some of this now. Sorry, as I was explaining. So for those of you who are trying to look at how this will affect the stock, remember that it's all about whether it affects this as a stock that is viable or not. Okay, so the first thing I will pick out here is that real estate investment, as I said, the properties are highly situated in desirable locations. They've got growth potential and strong rental demand, and will provide stability and cash flow over time. And I'll show you how that impact, how they're correct about this. The acquisitions will also unlock additional value and generate higher returns for shareholders. Now, let's take a look at this from an analyst. So this is the announcement that was made. Let's take a look at this from an analytical perspective. So from what I've seen, the combined impact of the potential transactions will be a potential 89% increase in lettable space. In other words, space that they can actually rent. Okay, in terms of square meters. So an 89% increase, almost double. So that's what this will end up doing. A potential increase in occupancy rates by about 4%, because these properties have got high occupancy rates, whether it's Lewanika Mall, Jacaranda, or Acacia Park. They've got very strong occupancy rates, or a potential 64% in the average square meter price of all their portfolio. So in other words, increased margins. That's what it will also do. And a potential 276% increased annual revenue to potentially $11.4 million. Currently, real estate investment makes about $2.9 to about $3 million a year in rental income altogether. And I'm not talking about just this. Now, this will add to that and probably bring in an extra $8 million in rental income, pushing them up to a potential $11 million. So we're looking at something that will increase. So do I agree that if this transaction is actually to go through, it's actually likely to make the stock a much better purchase? Probably, actually. So this actually now improves the prospects of this altogether. And it was sight when we could see that Napoli Investments was actually behind a lot of the underwriting of real estate investments rights issue in the last point. So it's now looking like we might be able to see this now come to light. Now, real estate investment potential acquisition analysis, this will help you. Now, if you look at each of the properties, we've actually broken them down in terms of monthly rental income. In terms of monthly rental income, we can see here that Acacia Park, this is according to the same circular that was issued out. Acacia Park brings in about $261,000 a month in rental income. Jacaranda Park brings in $147,000 a month in rental income, while Lewanika Mall brings in $266,000 a month in rental income. This is US dollars, people, not kwacha, US dollars. Okay, so the total leasable area, also the combined portfolio. So these three things have got a combined portfolio of $675,000 of monthly, not annual, monthly rental income. They have occupancy rates at 97, 90, and 96%. And as a combined portfolio, they've got about 94% in terms of occupancy rates. And the average rental per square meter is about $16.45. Now, you can see, if you look at real estate investments' current portfolio, you're looking at about $275,000 worth of rental income. This is what they generate currently, and a large component of that comes from arcades. If you're looking at leasable area, it's about 48,000. So they've got a bigger space, but they're making a much lower amount in terms of that. Now, they're making a much lower amount also because their occupancy rates as of December 2023, as of December 2022, as only sitting at 76.2% in terms of occupancy rate, meaning the average income that real estate investments is actually making is about $7.39. So they've got less attractive or lower margin property. That's one of the problems that real estate investment faces. So now what these will do is they'll actually improve the price of the property. The price is up by 64% potentially. Occupancy rates average are expected now to get up to about 80%. The total portfolio would go up to 92,432 square meters of leasable space, with a potential income, people, of $950,281 per month. So you can see that what this will really do for the company. Now, we haven't heard the price at which they're going to buy this, how they're going to buy it. All I can tell you is this is probably going to end up improving the financials of Real Estate Investment Zambia, which is a listed company, the public traded company. And therefore, in my books, it's starting to improve the case for making this a buy. It's really starting to improve the case for making this a buy, because this transaction will probably increase the revenue capacity of it. Now, adding to this, I just wanted to take a look at the 2021 in Kwacha. By the way, this is in Kwacha financials of real estate investment. We saw that real estate investment made a revenue of 55 million Kwacha in 2022, down by 4.94% to 58 from 58.801 revenue in 2021. You can see that their net income improved by 120%, pushing them up to 67 million 666, mainly because the value of their property went up because of the FX rate. That was the main thing that pushed the value of the value of their properties up. You can see in terms of an equity position, the equity value of the company was up 49% the next year, but the market capitalization is still sitting at about 81 million. In terms of earnings per share, we're looking at about 1.01. Now, price to earnings ratio is what I'm really concerned about. This is what's showing me that this is pretty much an underpriced stock. Price to earnings ratio is sitting at about 1.2. Okay, in terms of their profitability, which is 67, and their value of their company, which is 81, we're looking at only about 1.2. Now, remember, price to earnings ratio is usually somewhere around 7 times. In Zambia, it's somewhere around 5 to 7 times. So it is grossly undervalued. So already an increase in revenue is likely to turn this PE ratio to be much bigger. Now, remember, we don't know whether it's going to now result in a lot more stocks being issued. We don't know what's going to happen, whether shares are going to be sold for it, how this is going to be done. It's actually going to be quite difficult. And therefore, even the cash flows, if you take a look at the operational cash flow of Real Estate Investment Zambia, they've got an operational net cash flow of 24 million kwacha from the 11 that they had before. So this will also improve their operational cash flow because it's rental income. It's not valuation-based income or anything, it's rental income. And therefore, these are cash flow generating assets. Now, we also don't know the leverage sitting on these malls as well. So we don't know what's happening on these properties in terms of their books. I'm just looking strictly at the increase in revenue and the increase in value and the consolidated property value that will also help position. Now, so from that perspective, from a strict perspective of financials, you are looking at the fact that you're most likely to see that real estate investment has probably improved its case from what I would call a semi-buy to a strong buy. Now, there are a few things that need to be considered here. Okay, there are a few things that need to be considered here. It's also because of the fact that they are related parties in this transaction and who the regulators still have to get through this by. So I'll just read just quickly from the circular here. It does say the nature of the proposed transaction is classified as category 1, a related party transaction. Okay, it is listed as a related party transaction and is subject to shareholder approval in accordance with section 915 and 10.4 of the listing rules of the Lusaka Securities Exchange. And here are the related parties. LMC Properties, who owns Acacia Park. LM&C Properties Limited is a real estate company incorporated in Zambia, owns Acacia Park, and is related to real estate investments as it holds 59.8% of shares in real estate investment Zambia. So it is a shareholder. So the Acacia Park owner is a shareholder in real estate, and it's not just any shareholder. They are the majority shareholder of real estate investments. They are 59.8% of real estate. Akona Properties Limited. Akona Properties Limited is a real estate company incorporated in Zambia, owns Liwanika Mall. It is a related party to real estate as one of its directors, Gillian Cassidy, is a shareholder in LM&C Properties, the same company that owns 59% of real estate, the largest shareholder. So the director and shareholder of one of the directors of Liwanika Mall's owner, Akona Properties, is also a shareholder of real estate investments. And finally, Flory Limited is a real estate investment company that owns Jacaranda Mall. Flory Limited is related to real estate as one of the shareholders of Flory Limited, Mr. Diego Cassidy, You can see the shared surname there, Gillian Casili and Diego Casili, is a shareholder and director of real estate investment. And further, the other shareholder of Flory Limited, Gillian Casili, is a director of real estate investment Zambia and shareholder of LMC and Limited, which is a 58.9% shareholder. So one of the things you are seeing here is that the companies, the malls they're looking to buy are also owned by their own shareholders. So therefore, it is seen as an internal transaction. So it's going to be under heavy scrutiny. Now, this transaction has to go through approval. So it has to go through various parties. I'm just going to read very quickly who it still has to go through. It has to go through it has to go through the SEC. And so I'm just going to read this. This transaction will be subject to the shareholder approval, regulatory approvals, but not limited to the Securities and Exchange Commission, Lusaka Securities Exchange, Competition and Consumer Protection Commission, and the Zambia Revenue Authority. Therefore, the effective date can only be communicated at an announcement to be issued at a later date once regulatory approvals have been obtained. So they are still 4 people this has to go through. The Securities and Exchange Commission has to go through all of this. The Competition Commission has to go through all of this. But it is a consolidation nonetheless. Now, are we a country that's averse to consolidations? No. We actually support a lot of these consolidations that keep happening on the market. So if you're looking at Wealth Wednesday, this is one of the trigger points I will pull you to. Keep an eye on real estate investment Zambia. What is the likelihood this is going to go through? I'm not seeing many hurdles, except for the fact that maybe we might start having market concentration in the property sector. Because if you now start having the same company now owns Arcades, Jacaranda Mall, Liwanika Mall, all these major malls and shopping centers, they can have quite a bit of control over mall rental pricing, which then might have a knock-on effect. Remember, this is where some of the malls are where we go shopping, and these shopping centers also charge you their rent. I think what people don't understand is they charge you their rent. However, if you're looking at this from a shareholder's perspective, this is a very, very good transaction. Because it will give this body the ability to leverage what it needs, whatever improvements need to be done to improve arcades, also to improve the occupancy rates of arcades and improve the occupancy rates of some of these areas, and also make this a much more viable acquisition. On an equity basis, this is a company that is worth probably about $30 to $40 million. If you bundle all these properties together, we're probably looking at about $100 million property company, and that is a gargantuan. And we're not even adding in the potential of Park. I'm not sure if they're ever going to do that, but we can already see that it appears that from Mr. Casili's holdings of companies, there seems to be a consolidation of businesses. As I say again, Stephanie, some people respond to say, people are getting rich in our country, and then they'll start picking sides. I say it again, people. The poor pick sides. The rich pursue interests. If this transaction aligns with your interests to build your wealth, and you start to see the stock as viable, don't fight it, buy. That's what I say. Always sit down, by the way, with a qualified advisor to be able to take you through whether this is a good transaction for your portfolio and whether it sits well. Especially if you're a person who's trying to drift into the stock market while maybe you've been heavy on property. These are the kind of stocks that probably speaks to you a bit more because you understand property yourself. If you've built a property portfolio yourself, you understand that you don't mind investing in a real estate stock yourself. So you don't mind having that kind of an investment because I think you're probably comfortable with that kind of thing. But still, assess the financials. It's high risk. There's still some risks that sit in the future of the mall industry. Around the world, by the way, thanks to virtualization of business, we're starting to see a lower demand for things like malls and office parks and all sorts of things. We're starting to see lower demand for those things, but we are starting to see the market pick up ever so slightly. I don't know if you have any comments, Stephanie, before I go into the last bit of the news.
Not really, but if there's somebody out there that's got a comment as well as a question, I think as we get to sum up, we could pick a call or two. I do have a text message on the other side, and this one is coming from Taonga, as Taonga says, I completely agree with you. The poor definitely do pick sides, and I choose to be rich. Ooh, okay.
So learn to deal with people and things based on your interests, not based on your sides. The easiest way to be blinded is to pursue things. Vernon, who is on break right now, has written, "The poor and the rich, these are people from two different worlds. What parts them is mentality, which leads each one of them to seek different interests." And yes, one will say
Yeah.
so, but I'll tell you, one of the things I've seen, like I said, in almost poverty mindedness, is a tribal mentality. Now you have to be careful, people. I'm not talking about ethnic tribe. I'm talking about what we call political tribes. Please read a book by a lady named Amy Chua, Professor Amy Chua. It opened my mind and it helped me get away from that poverty mentality of always making decisions based on my tribe. Okay, and what I mean, what it means when I say making decisions based on my tribe could be hip hop lovers, my tribe could be my political party I vote for, my tribe could be my church. As long as it's a grouping, as long as you're making a decision to appease and please a community of people, you are engaging in what's called tribal thinking. Okay, and you have to be careful because tribal thinking is the exact way people get controlled. So therefore you become even afraid to pursue what's in your best interest because you're deadly afraid of parting from the tribe. And that is how many people are kept poor. Okay, you always find that's why I'm always telling people be wary of group voting, be wary of group thinking in your political decisions, be wary of politics because politics pins you into political tribes. So you will always say this when you're making all these others. If you want to look at how the wealthy operate, these companies, real estate investment, these companies have been operating since the 70s. They operated in socialism, they operated in communism, they operated in liberalism, they operated in what's it, in the socialism of the PF. They're operating again in the open markets of the UPND. They have continued to grow and operate. Why? Because they know the secret of power. It's one of the 48 laws of power. Do not pick sides. Maintain your independence and you have your power. So if you want to build wealth, power, you have to start looking at things objectively. You have to look at it based on your interests. What is the interest you are putting forward? What is the goal? What is the vision? Does this line up with it? And then you go for it and pursue it. And do not engage in back and forths with side picking. It is the least useful activity. The reason I'll tell you this is people, whenever you're dealing with another side, if you're dealing with people entrenched in groups, nobody's going to change their mind. Nobody changes their mind. Why? Because their decisions are not made based on how articulate your argument is. Their decision is made solely on how rich, on how much they're deeply connected with their group. Until their group disintegrates, they will not change their mind. So don't even waste your time convincing people. Work with things that will actually pursue the interest. So you need to have a set of interests pinned down. And that's where I'm going to try and leave it. That was the big story, the big analysis for today on Wealth Wednesday. Take a look at the stock, go into it inside out. It is an announcement that came out recently. I also put it on my page for all of you to sit down and look at the analytics of it. And just to give you the summary note, as I said, this is a potential transaction. It's not yet happened. It is a conversation that is being happened. A negotiation is happening. But for now, they have to give you a notice. And this is what we're looking at in terms of it. Take a snapshot of it. Take a look at it. Go look at the financials of the stock. Ask questions and consider whether you want to start opening this up. And this is obviously as the economy grows. Remember, when the economy goes into its growth cycle, which it's expected to do on the other side of 2025, going upwards, remember that the malls industry, the retail industry, all these sectors will start to pick up. Therefore, the value of rent, therefore, the strength of the currency. So many things will pick up. That will improve the financials of the stock. And I will leave it there for everyone. Stephanie, thank you for being my wonderful co-pilot. Only by voice today, but thank you for being my wonderful co-pilot. And I wish you and everyone a wonderful and blessed day.
Thank you very much, Nyumba. On that note, I think we should be ending right here today. Also, I should mention, make sure that you're not picking sides. Be like Taonga, who chooses to be rich. Till tomorrow again, it's bye for now, and have a good day.
Have a good day.